All right. Who is ready to get after it while everybody else is bleeding right now? There's blood in the water, folks. Fake traders, you'll see them when the market's green again. Whether that's now, whether that's 5 years from now, when the market's green, they're going to poke their heads up and they're going to come play. In the meantime, we're going to load up our bags on discount all across the board on strong long-term plays. Now, the play that I just added is my first real position added in the stock market since September 9th, I believe is the last position I actually added over here. Took my earnings from Ride, Lordstown Motors, off the board around $21. Got in there around $10.50 a share. So, that I could have had higher earnings over there, but I was waiting for this workhorse announcement. Deal fell through. That's all I've been waiting for. So I got out and I rolled that over into my new position. I can't just get rid of a bag. I'm either going to add to my existing ones. I do want to add more open door today. Waiting for a transfer to come through right now. So I'm going to be adding more open door while it's down and continuing to bleed. A lot of people are worried because they saw that their earnings per share were 130% lower than expected. I think they were expecting negative 10% for an EPS, and it was negative 23%. But anyone who sat through the investor call yesterday on here, it was a pretty damn good call. There's a lot of metrics that you can't see just based on looking at EPS and EPS alone. That's why I don't really, go off of that. I'm going to update open door over here. You can see we have a new layout for the public one. I'm going to do this across the board. I'm going to do this across the board for SPACs as well, just because I want to be able to sort this for y'all when it's on my website. When you do it the way we had it before, like when it was in this template, I can't sort this alphabetically for y'all to make it easier on y'all. And when we have like 100+ companies in here, you're going to want it to be sorted so that you know where everything is. Otherwise, it's going to be a whole nightmare. So yeah, I had to switch to this view. I do have it locked so that when you're scrolling on, I'll show you where we're at. We're figuring some stuff out over here too. There are some complexities when you're embedding Google Sheets into web pages, but this is what it looks like currently. It's going to be more ramped up than this, but we'll make it pretty after we at least get the technical issues sorted out. But I want this section over here. You can see that it follows on the left. That's going to freeze, so you know what you're talking about. Right now, we're stuck figuring that out. We got to put some custom code in there essentially, so that this section and this sorry, you can't even see this. You got to put some custom code in there so that when you scroll, this section and this section stay the same way that they do over here when we scroll, across the board. Otherwise, you're stuck looking at this. And you don't know, once you get all the way over here, which companies you're looking at. So, of course, it's going to load better than this too. I just have too many programs running right now, so I'm going to close this. But yeah, there's a redesign in the works. I'm going to update Open Door really quick to today's prices because it was already underpriced going into the call yesterday, according to the book. Oh shoot, where'd it go? Open Door.
you haven't already, guys, please like this video, smash the subscribe button, and ring the little bell next to it so that you can get notified every time we drop a new video, which I will be doing for Specs from now on too. When I see one I like, I'll do, short ones, and then also get notified every time we go live over here. We're making money in here while the whole market's hiding because they're bleeding to death, and we are not. So that's every single day the stock market's open if you guys like money. Alright, let me go update the prices, see what this brings the book value to now. Are y'all able to see these numbers too? I want to make sure that these are big enough. Let me increase the zoom on this. Where's our view? Oh, I can just do it over here. Alright, folks, let me know if you can see that a little bit better, hopefully. Alright, let me update this really quick to today, because I saw it was at like 17 bucks, and that's why I want to go scoop some more right now. I'll bring this one over here. So you guys, I'm sure a lot of y'all are probably the same way, but I know with online marketing, I got like probably 50 tabs open on my computer at any given time. It is a absolute nightmare on here. This is the company we'll get into some more today. We talked about it if you've been in here this whole week. We have been talking about that leading up to this. I've been saying I'm going to be loading up this bag as soon as my Robinhood transfer gets over to E-Trade, and it did. Loaded up a fat bag, where if this pays off, it's going to be my biggest position, even above Open Door. Open Door stonks. Notify the Discord. $18.25, so it's making a slight recovery. I honestly wouldn't hate to see this thing go back to 10 bucks. I don't even give a shit if it goes to 10 bucks. I'm just going to load up as cheap as possible because it'll go back again. It's a great company. Oh gosh, Abby, that is a good question. I don't know. We can do some digging today if you guys want to. If we don't have any new companies that you want me to check into, I'm happy to do some deep diving with y'all. If y'all want to do like a joint research session, that would be fun. 1830, 1064. Okay. Well, shit. It took too long. Price changed. First price, 1842. Okay. The reason that's important is because I need the most up-to-date market cap down here, and that stays the same while the price changes on Google. Okay. Oh my god, this is a massive opportunity. Oh shit, it didn't transfer any of the formulas over, damn it. It's alright. Let me see the vertical public one. Alright, 2 minus preferred. Yes, total shareholder equity, got it. Okay. Then I need formula for this. Ooh, what up, Brogan? How you doing, brother? I need to import these formulas now. It's book value per share, so we're looking for total shareholder equity. We're gonna do, yeah. What row are we in? Shit. 30. Okay. Ugh. Alright, so we need that, and we need to subtract preferred, put that, and then we're going to divide that by outstanding. Boom. Okay. I'm going to unzoom this for a second just to make my life a little bit easier here, because it's turning into a nightmare. Boom. Let's drag this all the way up. We're going to make this money. Bear with me, folks. My apologies. Oops. Alright, money. Beautiful. Then we're going to drag that all the way down as well. Got to enter a few more formulas in here so that they'll auto-populate from now on. These are the complexities that we go through in entrepreneurship. Alright, price to book is going to be current stock price over the book value per share. So we're going to make this equal to that divided by book value per share, which is that. Going to give us that. Beautiful. And we'll drag this one down. Let's see what other calculations we need to import into here. So every time I make a new spreadsheet, it's going to make me redo the calculations I'm finding out now. But I appreciate everyone's patience. I promise it's going to be a kick-ass resource for y'all as soon as I'm done, you know, really tuning it up. Alright, what other calculations are we missing? This one is just going to auto-populate for us. Give me 1 second, Savvy, just so I can get on with this. I'm gonna do the rest of it over the weekend. I literally cleared my schedule so I could have this all ready for y'all by the end of the weekend. Girls come calling, too bad. I got a spreadsheet to do. And I promise y'all, the girls are gonna come calling. There's nothing sexier to women than a guy who loves a spreadsheet. I don't don't know what it is. No need to even double check that with girls. This is a waste of your time. They'll all attest. Alright. Debt to asset. Slowly getting there, folks. My apologies. Alright. Exactly, Savvy. Alright, debt to assets, okay. Then we got like one more calculation. Oh shit, we got the profit margin ones, and then we're done. Equal to this divided by this. Boom. Drag this down for a few at least. Boom. Outstanding shares are good. Fine. Oh man, I was wrong. We had more. It's alright. I'll have to redo the conditional formatting on here later, but I'll do that in my own time. JC, the great news is we got discount specials today. And I just added a new position, so I'm pretty excited. I don't have positions often. It's literally been 6 months since my last real position was added. So I'm excited to tell you all about that, but I got a whole nightmare going on over here with the spreadsheet. And it is personal now. Not a whole nightmare. I just got to reformat the spreadsheet because it's a new display. Alright, profit margin. Wonder if I can just do this all in one blow. It's going to equal... What's our old profit margin formula? PG 34. Divided by, oh, income current period divided by revenue current period. Got it. Okay. I wonder if I can drag this over and it will actually pick it up. It would be electric if it did. AH 33 previous year divided by AB 33. Oh God, thank God. Alright, next one. This one. Okay. Go. Drag these babies up. Oh shit. We want to display these as percentages. Drag those babies down. Cool. 2 more seconds, then we're done. And we're ready to go. And I'll make this bigger for y'all to be able to see it too after I'm done formatting the sheet. This is the whole nightmare right now. Neat. Okay, let's save this. Beautiful. Now we're ready to rock. Alright, can y'all see that? Let me know if you can. Give me a 1 in the chat if y'all can see those numbers. You can see everything we're going to be typing in here. Otherwise, I'll have to make it a little bit bigger. Alright. Look at that. Open Doors book value per share. 2.06 right now. Anything below 1 is considered 100% undervalued currently. What the numbers on the balance sheet that we know exist aren't being recognized by the public currently. Anything below 3 is typically very likely to be considered undervalued. So, that's my rule of thumb. It's just coincidental that Open Door was my biggest bag until today, and it still is price-wise, but I have a new position that I think might succeed it in the interim. Yeah. So I'm looking to load up more. I'm waiting for a transfer to process, and then as soon as that transfer processes, Logan, what's going on, brother? As soon as that transfer processes, I'm going to load up more in my bag. All right, let me catch up in the chat. Let me know what you guys want to do. You guys want to talk about companies that you're looking at, that you're seeing? You ask questions, I'll answer questions. You want to do like a group research session into Shamal's new IPOs he just announced? We can do that as well. You know, I don't really have a set plan going into today. Didn't expect the market to look like this, but I don't really panic when this market is, looking the way it is. I literally loaded up a brand new bag this morning for cheap. So, Brogan is trading today. Awesome. Tesla's at 563. Yeah, I mean, I think Tesla's got more room to fall. What did I tell y'all? Literally, even yesterday, I just reiterated it too. Tesla, everyone knows this. I mean, you should know it's extremely overvalued. I'm not going to bet against Elon. I think Tesla's a phenomenal company, but the way that the market's pricing it right now, it is so overvalued. It's getting to a dangerous point where I'm like, you guys make your short-term gains. I don't care. I'm not going to be there when the market goes south and it comes crumbling down even faster than it climbed up there. And that's what we're seeing right now. The market goes red for a few days. Tesla's not going to fall. The market goes red for 2 weeks now. Tesla is crumbling from 800 when I did this. That was the first company I put in my public sheet was Tesla. Look at what they were trading at. Their book price, or their price to book ratio, was 33.5 at $796 a share. Anything above 3 is not overvalued, but anything above 3 starts to get in the realm of maybe being fully priced already. My rule of thumb is typically around 6 or 7. X is probably fully priced. Anything even beyond that, you're looking at fully priced and then overvalued. 33.5 times that when their book value per share is $23.82 and it's trading for $800. This is going to come crumbling down when people say, oh my God, look how far this is crumbling, or look how far this is falling right now. I need to pull my money out. Either I need to secure my earnings that I haven't secured already because I got greedy. It's human nature to get greedy. You got to expect it. Or I'm losing my ass right now. I need to get a Tesla right now. So you said it's fallen all the way to 563, Savvy. I can see it continuing to fall. If this market doesn't turn around, Tesla's going to come crumbling down to a more fair price, and at that point, I'm going to consider jumping in. But even at 563, let's update this really quick. Tesla stock. $588.30. Okay, let's update this. What did that give us as a market cap? 527. We're coming back to reality. It was almost $800 billion, guys. That is insane for a company that just had their best year ever and did $31 billion in revenue. That is absolutely fucking asinine. And yeah, I mean, I'm a value investor, so I think it's asinine. I think Tesla's a phenomenal company. I've been long Tesla since 2014. I didn't have the funds to get in at that point, but I was always the one going to bat for them with only firepower I had of my words and my research. PE ratio is pretty nice there. That's insanely high. But even at $527 billion, that's so much speculation and so much growth priced in there. It's still absurd. So let's see what we're at though. Let's see if it's not going to be 33.5. It'll be a little bit more healthy. 527.92. Okay. Let me update the market cap. Alright, so we're at 24.7. I think this still has room to fall. I can see this falling until that value gets around 10 to 15. If the market really, if we do go into a crash, this is not a drill. I think it is a drill. There's about to be more money pumped into the economy, so I'm not really worried. That's why I see such good buy opportunities right now, because I'm like a few weeks from now, these prices are going to be back to where they were, for the most part. I'd anticipate it at least. But if we do go into a true crash, Tesla's price will fall to about 10 to 15, if not lower, as people pull their money out of the market. and they push their money into safer plays. Tesla is a safe play. They're not going anywhere anytime soon. But at the price people are buying in at $800, I'm like, it's not worth it. It's literally telling you it's not worth that. So yeah, that's where I see it falling to. I don't know what price it's going to be to equal that. I'm sure we can do some simple math. I don't want to spend too much time harping on Tesla being overvalued. I don't think that's anything new. I want to talk about new things so we can all make money together today. Sound good to y'all? Let's see. All right. Hello, I am wondering, do you hold any KHC? It is a PB of 0.89. No, what's KHC? How does that sound familiar? I do not. You want me to look into this one, Savvy? I can do KHC. Closer to our goal of becoming wealthy even on days like this because we can, one, either buy cheap for the long term or spend time rebalancing our portfolios. Totally agree, Savvy. That brings a long-term spec stocks only, so if you are holding long-term, it shouldn't bother you. Just about to dive into crypto? Okay. I looked into Link some more yesterday. I really do like Link still. Wow. That's some good news, Logan. Uh, H bar. I think someone else just sent me H bar recently too. Hmm. What's the deal with H bar, Hanks? Great to have you here, by the way. Let's see. Can't wait to see how much the whole concert makes from merch, ticket sales. Yeah, that's awesome. Sold out. Tossed at 300 pre-split, sold at 1700, bought back at 1400, sold at 500 post-split. Back 390, sold at 800. Savvy, you are playing Tesla very well. I am not in KHC. What's happening to Open? They're taking, people are taking their money out of the market right now. They're panic selling essentially. So I'm about to go buy more. Um, as soon as I've been saying it, I just owed it, or I just added my first new position since September, which was Open. I see a lot of great plays. We'll get into that a little bit later. But as far as Open Door goes, I'm about to go load up more in my bag because prices are falling as cheap as I've seen since around like October time. And as soon as there's more money in this market, the price is going to shoot right back up again. And they're about to pass a new stimulus. There's a lot of money about to enter the market again, and it's going to create more certainty, and certainty is what drives the stock market, folks. Without certainty, when people feel scared, they pull their money out. I need to pay my bills, right? I don't have time to go play the penny stocks right now. I can't afford to lose my money in penny stocks. I need to pay my bills. The mortgage collector is here, the mortgage guy is here. My car note's due. Yeah, I don't have time to go put money into a SPAC that's trading 50 times future revenue projections right now. Um, oh, H bar, Hanks, gotcha. Is H bar, is that crypto or is that a stock? So as far as what's going on with Open Door, we just saw I updated the numbers again. Um, Yesterday I was already saying it's like it's pretty undervalued currently. Um, and if it's trading at, this was at 1842 when I did a second ago. Uh, Yeah, it's trading at 2. Anything below 3 is there's a high probability it's currently being undervalued, and I think it is. I think even at $30 something it was undervalued. So I'm not really worried. I said it yesterday too. It doesn't matter to me what the price is today. It's just a reminder of what my shares are worth currently. When I get into a new position, it's because I'm looking 5 to 10 years in the future. Um, and I've got a lot of confidence the money's going to grow to where I expect it to, right? I'm not going off of just their projections. I'm doing my own research, looking at the total attainable market there, total addressable market, um, as to what they can realistically conquer. And if they conquer it, that's where our money's going to balloon. So I'm loading up more on open. Um, like I said multiple times now, as soon as the transfer clears into my account, I'm going to be loading up more on open, expanding my position because these prices aren't going to stay like this forever. But if you're looking for a short-term play on open, I'm not a trader, so I don't know. What to expect here based on looking at the charts. We do have people in the community who do that, but you're going to see this price balloon back up as soon as there's more confidence instilled in the market. So when that is, I couldn't tell you better than the next guy probably. This is not the real market crash in my eyes. All right, KHC I want to do. Thank you, Brogan. The question is, what's happening with open? So I was just explaining, my position is a long-term position. I couldn't tell you better than the next guy what's going to happen tomorrow with Open Door. I'm loading up more myself because it's my positions are meant to be held for 5 to 10 years because I believe in where they're heading. I believe that the growth is going to be there, and I have a high degree of confidence that that growth is going to happen. Not just based on their projections, based on doing hours and hours and hours of due diligence on my plays. Um, 3 in the morning, I'm researching my plays. I don't get in anything unless I'm super confident. So. Um, I know open will rebound. I know this is going to be a cheap price when I look back 5 to 10 years from now. If I had a chance then to get into Open Door at $17, to get into Open Door at $40, to get into Open Door below $100 a share, I know it's going to look like a bargain. Same thing. I have my regrets with not getting into Bitcoin or loading up on Bitcoin enough sooner. Yeah, I was in college, but same goes for Ethereum. That's always the regret is I wish I got into these plays sooner. I wish I did more research on them sooner to feel more confident in them, to do whatever I had to get the money for them. And that's how you create wealth. I'm not planning on getting rich this year. Like a lot of people are trying to get, they're trying to change their footprint on the planet, and I respect the hell out of that. Everyone is. Um, but I'm not planning on getting rich this cycle between crypto or the stock market. I'm taking this cycle as a learning opportunity here to see what happens when you invest in good companies and what separates a good company from a bad company, and what happens when you take the slow train and everyone takes the fast train, and then the market does eventually crash. And I don't think we're seeing the crash right now, not yet. But when it does crash, all those people that didn't really spend time learning, they just spent time chasing bags and chasing what was hot, those earnings are going to go away more than likely from what I've seen throughout history. I studied history in college. That was my major. That's why this stuff is fascinating to me. So I'm planning on using this cycle as a learning opportunity in both crypto and the stock market so that I can leverage it, find really good plays, find them for cheap, like on days like today, load up bags of those, and then when the cycle starts again next time, that's when I'm expecting my footprint to change. Because I've got a bunch of plays for cheap that people sold because they lost their ass in the market when it crashed. Hasn't crashed yet. Not saying it is, but when it does, a lot of people are going to lose their ass. So the question, Brogan, sorry, is where are you seeing support for Open Door? when can you see this thing turning around if you're looking at a chart. I told them, like, I don't know anything about that. I do know about it. I can look at a chart, pretty loosely and tell you what's going on. But as far as, the level that you look at it, the level that Taylor looks at it, I couldn't tell you I couldn't tell you anything of value. TRSSF, yeah, I could do that for you, JC. Let me do this one really quick. Let me fold this over here also, just so you guys know I'm getting all my numbers from this. But for the sake of getting all these numbers in here quickly, so we can get some more companies, I'm going to do that. Good seeing you, Logan. Great having you in here as always. Appreciate you stopping by, and I will see you next week, my friend. Alright, so what does KHC do? Kraft Heinz. Food. God. If anyone's good with spreadsheets, I know we've got a few members in the community. I'm pretty fucking stupid when it comes to spreadsheets. If you could help me formulate this a little bit better, I'm sorry, format this a little bit better, that would be greatly appreciated, because it is, I'm sure, very painful to watch me hit the spreadsheets. Let's get back over here. Let's see. Did you talk about TSNPD/Humble? I have not talked about TSNP or TSNPD now /Humble. We've been talking about it in our burner market community for almost 3 months now, which is crazy to think about. It's been that long. Back in December is when it kind of started. One of our members has been made a millionaire off that company, and then quickly became a multi-millionaire off of that company. We just had the earnings call, or the investor call, a week ago, I believe, over on my partner's YouTube channel, Burner Market Trading. If you've haven't checked it out yet, go take a look at that. The link is in the description below too, I believe. But no, I think that TSMPD, Humble, they're doing big things right now. And I've watched it balloon from 8 cents a share all the way up to almost, way over $1 a share in the past 3.5 months now, which is crazy to see. Most of the penny stocks do not do that. I don't have a bag myself, but there's community members that know way more than I do. If you're not in our Discord, also, I can get you a link there. There's a whole channel for TSMP. Where is it at? Humble. So you can see they talk about it in there every single day. Oh God, you can tell you can always tell the good companies from the okay companies, because the good companies have a annual filing that's like 100+ pages long. It's just an absolute headache to sort through. But I like looking at good companies. You can see what they're doing well, and when you see a bad, like the more good companies you look at, you can spot the bad companies right away. Like, ooh, these numbers don't usually look like that with the companies that are worth billions of dollars now. I don't want your summarized balance sheets, I want your balance sheets. Light Cetaphil. Well, I don't know how to say your username, but Brogan, that's who was asking about Open. They were here for the investor call yesterday. They are a big Open bag holder. I don't know if they're in our Discord or not, though. Okay, so these are in a million, so I gotta add 6 zeros at the end. Cool, cool, cool. Big numbers. These are the big boy numbers. This is where we want our companies to grow to. Kraft Heinz has been around forever. We've reduced our liabilities by quite a bit this year also, 114 million. Our assets, though, reduced by 1.6 billion. Debt to asset ratio is exactly 0.50, so that's, you know, pretty safe. It's balanced. Let's see, our most liquid that can be liquidated in a year or less are at, they've increased. Nice. That's above 1.2, so we are liquid. We are a healthy degree of liquid. Shareholder equity has been reduced by a little bit. That's because our assets fell and our liabilities did not fall enough with that. Let's see, preferred. Zero. Okay, keep scrolling. Where are our revenues? Man, they make it hard to find their revenue. Give me a second. There we go. I think. No. Just hand the numbers. Okay. Finally found him. Millions, okay. Revenue is up this year. Same numbers. Alright, let's get our net income. Profit margins look like they are way down this year, though. We'll see at the low, or we'll see the side now. And is this formula like that? No, it's not correct. Okay. Alright, previous year. So we are going very far in the wrong direction right now. Same numbers are going to be over here. So yeah, $1.5 billion in the wrong direction in terms of profit margin goes, or in terms of income goes. Bottom line, look at our profit margins now. They were 8% the year before. This year we only had a 1% profit margin here. I think this was a dividend stock though, right, Savvy? I don't know what their dividends are, but that is everything I'm seeing over here. I'll throw this in here for y'all. There you go. All right. There is Kraft Heinz Company. That's a big balance sheet. A big report to go through. Let me catch up in chat. Sorry, guys. G-Tech, okay. Were you ever bullish / bearish on S&P Arlo? I like those partnerships and think I may increase my stake. S&P, I can pull up for y'all. It's in the SPAC sheet. SPAC sheet still has the old format. So Volta, that's what it was. I'm sure it's got knocked down as well. Let's see if I have any notes for them. Ton of high-level partnerships, relatively reasonable enterprise value and equity value, can get it at a fair price still. Yeah, I mean, I didn't see anything wrong with them. My play in that sector, if I were to hop in one, would be MP Materials, just because I like the idea that they're going to be providing energy for the EVs that we're about to see in the next 10 years, driving all across our country at least, and I'm sure the planet also. So it makes sense, your heads are always in the right place here. Brogan, I'm not sure if you've been here when I've talked about this before for MP. Your head's in the right place because you've got all these EVs. Well, what do EVs need? They need to be charged. So you find companies like Volta or any of the other charging companies that are going to provide energy to those batteries, or you find people who make the batteries. Where I've gotten to, and it's gone up substantially. I had an opportunity to get in there at 27. I think it's at like 40 last I saw. Thank you, Savvy. I like MP. MP Materials, because these batteries that are going to be made, that are going to be required for all these vehicles, they need certain materials like lithium. There's a whole list I can't think of off the top of my head because I'm not in them right now currently. Basically, there's only one mine for those materials, those rare earth materials that are required for these batteries. There's only one mine in the United States, run by a company called MP Materials, who my boy Shamoth, you guessed it, brought public through FVAC. He didn't bring public, sorry. He led the SPAC on, or he led the pipe on FVAC. They became MP Materials, and I had an opportunity to get it back in around 27. I think I forget what I used those funds for on another play. I mean, the play made me money too, I think. But that's where I'm following. Like, I'm trying to be one step ahead, and I don't know where MP's at today. I like them more if you can get them for a fair price. I think you can find warrants on them too. Let's see. $38.91. So look at that. They didn't even take a hit. They didn't even blink. I mean, they took a hit, and I don't want to make it. I don't want to downplay it. Let's see what they are on the 5-day. Well, they climbed all the way to 50. Holy shit! They hit $50, and then the market took a shit. And they're sitting at $39 on a bad day. I had a chance to get in at 27, and I didn't. If you can find warrants on this company on a platform like E-Trade or TD Ameritrade, that would be my play here. Anything that goes public through a SPAC, I'm always looking to buy warrants rather than buying actual shares on them. That's just what I like to do, so I can buy more equity in the company with limited buying power. That's how you can stack wealth. And the warrants, when the stock price goes, the warrants go too. It's essentially, like, the way I look at it is a down payment on the shares that I do plan to eventually own outright. But I have 5 years to either muster up the money to get those to buy those outright for $11.50 more per share, or decide I'd rather use my money somewhere else. This isn't really going in the direction that I thought it would go. Limits my risk there also. I'm probably going to make money in the meantime as well. And then ultimately, I can sell the warrants and collect my earnings on those too. So that would be my play here, because I know they want the public through a SPAC. I know there's warrants floating around out there if you were interested in getting in there. SNPR though, let's get on that. I don't want to plug this. This is not even my play, right? I've recommended it, but it's not something I'm in myself right now. Let's see. Flow SNPR also have an integrated software which allows you to order Amazon or Walmart items while you charge. Really? That's pretty awesome. These are the features are always the cool things to talk about, right? And when I was starting my first company and we were raising money through investing rounds, right? That's the one I talk about. It was called Trendsetter. We raised slightly under $1 million in funding when it was all said and done. Ultimately got beat up by Instagram. Not going to harp on that. It's all right. Not a big deal. The point of the story is when we were raising money, there's a concept that floats around the valley that not enough company pitchers really utilize it. It's really powerful stuff. It's the concept of starting with why. Because everyone, when they start a company, or they find a great company like this, and this is going to be a good lesson for y'all too, if you can really, harness it and, try to understand it, if you're unfamiliar. Everyone wants to start and talk about the features, right? Well, what does it do? Well, it charges your cars, but it also, allows you to buy food and order your groceries or whatever while you're charging your car, so you can walk in the store, you can pick up the groceries, and when you get back out, the groceries, one, are already paid for, tells you where to go, awesome stuff. By the time you get back out, your car is going to be charged, you're ready to go. It just makes it a convenient process for you, more convenient than it currently is. You can do advertising through there. I love that too. So that's a feature, right? And that would be the what. So the way that you follow and you start with why is it goes why are you doing this, how are you doing it, and what are you doing to basically tackle everything you explained so far. So why are we doing this, right? Why are we making a company that charges cars? Well, there's about to be an increase in EVs all over the country. We know there's EVs companies popping up everywhere. The country's trying to go fully electric because it's good for our planet, or much better for our planet than typical fossil fuels would be for fueling our current vehicles. Trying to basically go green, and this is the best way possible. It's just more resourceful. So there's going to be an increase in EVs, and they're going to need to be charged. So that's why we created Volta. And then from there, okay, well, how are you planning to tackle this problem? They're all going to be charged. Well, we've made these charging stations that are going to be able to charge them at any grocery store they go to, any just convenient place where they would park their car anyway, where they can charge, they can take care of their typical business. Because that was always a concern for me is, all right, I got to spend 40 minutes waiting for this to charge. Well, I'm going to need that to be at a restaurant or something where I can go sit down and eat, or you don't want to go to a bar because then you're going to go in there and get boozed up. But All right, so that's going to be another issue, right? You know, we're doing this, and then it's going to be a concern also is you're going to have to wait 40 minutes typically to charge your vehicle fully so you can go and, you know, be on your way. It's not like gas right now. So we're going to put it at, you know, a shopping mall. We're going to put it at, you know, the grocery store so that while you're getting your groceries, you can charge up again, be ready to go. Or if you're running out of gas, you know, we'll put it at a restaurant, you know, yeah, you guys understand that. So that would be, you know, how we're tackling this problem, the multiple problems. And then what specifically are we going to do everything that we just explained? Well, actually, what would be putting it at like grocery stores and all that jazz. And then we're also going to have, you know, shopping capabilities on there so that you can, you know, do your shopping straight through your charging port. Walk in the store, it tells you where to go, makes it even more convenient for you. So it's a no-brainer to use our charging. And it also does this, and it has this bell and whistle and this bell and whistle, and then you expand all the way out to what it does after they've already understood what the problem is. Now I know this is we all in here understand what the issue is and why this is, you know, such an important company, or Volta, I'm sorry, in this case, is such an important company, or any of these charging companies are important. Um, but that's the concept. When you look for investments to make, try to harness it on what problem they're solving or what problem they're tackling. Sorry, why they're doing it in the first place, rather than getting distracted by all the bells and whistles of, and it can do this and it can do this and it can do this. Because more often than not, if they're trying to surprise you with these bells, or they're trying to captivate you with all these bells and whistles, it's typically a facade of, you know, we're not tackling that big of a problem right now, or we're not that far ahead of our competition, or we don't really have revenue or anything going on right now. Um, that's at least what I try to do, is I try to see right past everything they do. So when you guys see me look at their investor presentations, typically I don't even give a shit what they do for the first 10-15 minutes. I'm looking for the numbers. I'm looking to get like a general idea of what the company does, and then putting it together in my head of, oh, that's important because of this, or that's important because of this, or you guys fill me in and you say that's important because of this, and I say, great, thank you guys. So didn't mean to go on a tangent on you guys, but I think it's cool what they're doing. I think their partnerships are really great high-level partnerships. I know Amazon is a customer of theirs right now, not an official partner on paper, but they're a customer. Um, I like Volta. You know, I'm not in it myself. If I were to get in that sector, I told y'all I'd probably dive into MP Materials, the one I just showed you, just because all those battery companies are going to need their material to make batteries to power all the EVs that we're about to see on the planet. And if you can own the only mine, or the only company that has a mine in the United States that accounts for 15% of those materials now, that's going to pay off far more substantially, I believe, than any of the charging companies will, or any of the EV investments will in the first place. They're running a monopoly in the United States legally, and they're backed by the U.S. government currently. The U.S. government needs them to succeed, so they're going to make sure that they won't fail. Otherwise, China and the Pacific Southwest, um, those countries, they run all the other. They have the supply of materials that we go import now. So we need this company to be successful, for the U.S. to, you know, not allow China to strangle us and say, well, we have all the materials, you guys need to come to us and we're going to set the price, and, you know, use it as leverage on us, essentially. So I know that was a larger explanation than you guys asked for, but that's what my thoughts are on SMPR. Hope that was helpful in some way. Alright, let's see. What other one did we get asked about on here? TRSSF. They're an OTC trading for $12. Wow. these? Oh, they're in Canada. Got it. Okay. So we're not going to do them right now. I don't know. What else do you guys want to talk about? We can do SPACs. We can look for more SPACs together. We can go over this. I think y'all have heard me, go on tangents about RMGB already. And why I think they're so valuable. I believe they're their enterprise value of $7 billion, almost $8 billion, is not even being met over here. We're typically seeing these SPACs come public, and their enterprise value, like very healthily, will be 2 to 3 times. Like the market caps are that you see publicly will be 2 to 3 times the enterprise value. Is what I've been noticing. That's healthy. Anything above that, you're starting to get a lot of speculative growth in there, and that's depending on the company, could be okay. Could make for better short-term returns, obviously, but they're saying they're valued at $8 billion, and I think that was a fair valuation based on the revenue that they have coming in every year. They've got almost $700 million in existing revenue. A lot of these companies, like CCIV, I don't want to harp on that one again, they're pre-revenue companies, and the public is just blowing them up because they just, they can't get enough. They think the company's super cool, and that's fine. But I want companies that have money coming in here, because they're going to be around if and when the market crashes again. And you're seeing that now that we're going through a long correction. Now, I don't think a crash, but we're going through a long correction for sure. And we need this. But they've got $700 million, and they haven't been noticed by the public yet. And these years of future projections, this has 100% already been committed. $700 million. This is for 2023. They've got 1.2 billion of this already 100% committed on paper. This one of $2 billion, almost $2 billion in 2025, so not even 5 years from now. They're going to a $2 billion annual company because they're #1 renewable energy provider in India. That's already got $1.3 billion committed to it. So when you're looking for intrinsic value, you're not only looking for where it's at now, where it's going to be, but you're looking for how confident you are that it's going to be there. And when you got 1.3 billion of 2 billion 5 years from now already committed, I think that number is going to go up. I think the projections are very conservative, and I am very, very confident that money's going to be there. Right? I'm 100% confident this money's going to be there. Whatever this percentage, 1.2 of this equates to, I'm that confident it's going to be there. I think the numbers are only going to continue to grow. It's a billion-person country that desperately needs renewable energy companies or renewable energy sources, because fossil fuels just aren't doing it for them. They don't have enough resources as is, and fossil fuels aren't efficient. So that's why I love this company. That's why I dove in. That's why I added my first real position since September of last year. This morning. That's RMGB. So I was hoping to dive into that a little bit further today if you guys are on board for that. But if you guys want to do something else, just let me know. Because I'm trying to find partnerships for them. It's really, really difficult to find a whole lot of information on India-based companies. Just because they're a closed market typically. So I was, as you can see, doing my own DD over here last night. New power. Let's see, given that TRSSF is a Canadian company, does that mean something negative to you? No, it doesn't mean anything negative to me. It's just the foreign-based companies. Scott Favorite, thank you for tuning in, my friend. Great to see you here as always. Smash that like button, please, if you could. But TRSSF, there's nothing wrong with it being a Canadian-based company. Just depending on the company and the country that they're based in, not everyone files their annual and quarterly reports to the SEC. If they're not being filed, if they're not being filed to the SEC, the numbers you see aren't backed by the SEC. They're not going to get audited by the SEC. So, not saying that every company out there is, fudging their numbers, but I don't like to play the guessing game of which ones are and which ones aren't. If they are filing with the SEC, which they aren't currently, I saw they've got a few files there, but not their annuals and not their quarterly reports. If they're filing with the SEC, you feel a little bit better about it. But you start to struggle to find their financial reports, based on quarter and annual. You'll find it on their website, and then, they're typically formatted really poorly. They're just really confusing to read, and those are typically for a reason also. George, great to see you in here. Big fan of the show. Hope to see you back on Nick at Night soon. So there's nothing against the Canadian, companies, nothing against cannabis companies in general or companies from other countries. That's why I said what I did. But there was no shade being thrown. Um, Usually consistently raised permanent capital via equity, preference shares, and following side institution. Ooh, we already looked at their investment presentation. I'm looking for partnerships. I think their investors might be seen as partners to them. There's a lot of really, great people to see attached to the company you're invested in. To know that Goldman Sachs has been a heavy investor of theirs since 2011 is great to see. Obviously, Goldman Sachs is one of the most well-respected companies, or funds, I should say, in our country for sure and in the world. They own 48.6% of Renew Power for a reason for the past 10 years now. every company out there, every investor is always looking for a way to enter the Indian market because it's a closed market. You can't get in there unless one of your um, co-owners, I forget what the exact rules are, but I think someone in your company, one of your executives or co-owners needs to own at least like 32% of your company, and they need to be a citizen of India in order for you to get your foot in the door in there, because they need to keep, they don't have a lot of resources as is. So the business owners there, like they want to take advantage of their own billion-person economy, and not let other capitalistic societies with more resources come in there and take advantage of that themselves. They need to make money somehow, some way. So the fact that Goldman got in there, it's very impressive in and of itself. They're in there for 10 years now. I'm sure they've seen their money grow substantially. They've obviously got a very strong network around them. That's why you're always looking for who's investing, who is bringing your company public. It's all about their networks. What can they do with your company that you can't currently do without them? So typically when people raise money in investment rounds, they're looking for, obviously funding if they need it. But the people who get the most money in an investment round, they get the best valuations or whatever the deal is, they get the best deals, are the ones who go in there and they make it clear, we don't need money. Like, we're not looking for money. We're looking to work with you, someone based on, what you could bring to the table for us. What does your network look like? What does your knowledge look like? Do we think that you'd be valuable in that aspect? And they're doing $700 million of revenue a year right now as they scale up. They don't really, yeah, they've got debt, but they don't need the funding, if that makes sense. It will definitely help them out in the long term, but they don't need it. They find these partners and they find the funds that bring them public, in this case, through SPAC, that have the networks, they have the knowledge needed to take them to the next level. Ideally, that's what they're doing. But they've got a very impressive investment board. They've got a very impressive pipe, obviously led through by Chamath for their SPAC. That's why I invested heavily in them this morning, and pulled my earnings out of Ride. I was planning on doing something with it eventually, but yeah, rolled over all that money into RNGB. It's trading at 10 something right now. Not much. RMGB, sorry. 1034, so it's up 9 cents in the day. It got down to like 1006 yesterday, so I was trying to scoop around here, but I got in on the warrant game. So I don't know if they're gonna have this on Google that you can look at. I got in at $1.40. I don't even know if it's up or down. I don't really care what it's at today, because when the market rebounds and people start to find out about this company, it's going to explode. But no one is talking about this company because everyone's obsessed with space right now. I think space is dope. I think it is one of the coolest topics out there. I think that these companies will be something eventually. I think I can get it at a cheaper price when the market actually does go through a crash, because the speculative growth companies, space companies in this case, will take a dump as well. So I think there's better short-term plays, long-term plays, that will hold their value when the market does eventually crash. I think this is one of them, and I can take my earnings from those, or I can take my additional capital at the time and buy these space companies that I do want to have ownership in eventually, for a fraction of what I have to pay today to get them. So I don't know what their warrants are trading for. I can look on my phone, but then the music stops. I'll have music coming to the computer by next week. I'll take this weekend to be improving a lot of things for y'all. Yeah, $1.42, so I'm already up 2 cents a warrant. Wow, I look like a genius right now. No, I'm going to make a short video on this. I'm going to try to in the next week or so. Because this is going to be... Yeah, I like that play, Savvy. What's your strategy with buying shares and then buying warrants in addition to them? Just out of curiosity. Let's see, Walmart's Flipkart will only give away 2-3%. I don't know, we don't need your money, we will take it, but Let's see. Let's look up. Let's see what's trending on Reddit right now. How about that? Let's go hunting. I want to look at some new companies. Oh, we wanted to do a Shamoth crawl, didn't we? Mm, let's see. iPod is not even a market target. Yada yada yada. I'm trying to see what industries. Typically, they're going to have an industry attached to them. Savvy. IPOF was supposed to, or is supposed to be his biggest stack yet though. MP Materials. Talked about that one a little bit earlier. Desktop Metal is one that I was considering getting in. That was when it was at $11. I did get in though. It's not about what I consider getting in; it's about what I get in. And I did not pull trigger on either of those. Unfortunately, I will eventually when I have some more capital. I looked at this one over last weekend, and I wasn't too into it. I think it's an interesting concept, but just not something that I'm. It's not sexy to me right now. Electric Bus Company, Proterra Public. I did see that one. I think I looked at this one briefly. this. Let's read through what people are saying. Maybe they'll have some sources in here for us. Ideally. I could see that being the case, especially, when they have these funds, right, where we talked about their networks as investors and partners or whatever. Uh, they've got their own small, their portfolio, because they're such large investors. These are all resources for them, and they'll give. Let's say he takes MP Materials, for example, as part of their pipe, and they make the materials for the batteries. Well, it makes sense for him to go and acquire a battery company too, then, wouldn't it? So he can own a part of that entire chain, where he owns the company that supplies all the materials for not only his company then, but all the other all the other battery providers in the country that provide him for an EV. So I would imagine that it would make sense through a series of these IPO A through Z, through his SPACs. So they're going to have MP Materials, and whether he leads or takes it public through his companies, or he's in a pipe for any of these companies later on. But it would make sense for it to be MP Materials, EV company, or I'm sorry, EV battery company then. So nanotechnologies is what they're rumoring, or speculating it could be off of really nothing. It would make sense though. So that company could then buy the materials from MP Materials, so it's going to make that company more money. It's going to make them more money, which makes him more money. And then also, they're linked to Shema, so this battery company's going to make money. Then he's going to go probably find a EV play to get on, where it's going to be either taken public through his own fund, social capital, so IPO A through Z, or he'll be in a pipe for an EV company going public through someone else's SPAC that he likes. And that way he can do, MP Materials that supplies the materials for this battery company, that supplies the batteries for this EV company, so on and so forth. So it would make sense for one of his plays to be this. It's just all of it's off speculation right now. That's really all we're hunting for, because we don't really have much to talk about right now unless you guys have a company you're looking at. I'm going to keep diving into IPO, FGHI, and see if we can find anything on them. SPAC hunting right now. Money hunting. We're hungry. When the market comes back and everyone else is back here, we're going to be the ones who loaded our bags up when the market was as low as it got. What's going on with the market as an entirety right now? Is it up? Oh, wow. $373, wow. There's got to be news coming, I'd assume. JC, there's money getting pumped in the market to make it pivot. So I'm assuming that there's got to be government news coming. Probably not, maybe not today, but next week. Remember, the news when it comes to the news, the smart money, the institutions are going to find out always, a week or so before we do. So they can get their money in, they have time to make their moves, and then the news will come out. All the retail investors pump their money in, and they've already gotten in, like we've been doing today. We don't have that luxury. We have to, make our moves when the market's down because we're smart enough to. And the retail investors are going to get the news and they're going to pump their money in. It's like soon enough that hopefully they get smart and they realize it's a little bit late at that point, and they start doing what we do so they can make money with us. But yeah, that's why it's like you guys are animals for being in here with me today. Uh, and last 2 weeks, honestly, this market's been red. You got to have a brave face when you're looking at a red market every single day. And y'all have been here every day. You are the real ones. Let's look at these ones that we do know about. Enterprise SaaS company, public TSIA. Latch. Operating system brings together services for building managers, residents, and service providers. Was created by Latch. Smart Sims delivery. See, this is why I tail Shamoth, guys and gals. Sorry, JC. I know JC doesn't really mind that, but I do apologize. I should say lady and gentleman from now on. I love Shamoth, like where his head's at, how he thinks. He thinks in the future, but realistic future, right? What's far enough in the future that it's going to be, a sexy play, if I get in right now, but not too far in the future where you're ahead of your time. A lot of companies have that problem where their heads are in the right place and you can definitely see where they're going. They're too soon to the market and they fail because of that. You need timing is everything for these companies, and I think that Latch, from what I'm seeing so far, I'm going to go through their investor presentation if I can find it. Smart access is going to be huge. I think people are going to do away with keys probably, in the future at some point. But even to be able to, unlock your door through your phone, people, that's convenience. Let's see. Smart home. Let's see what they do exactly, because I don't want to just talk based off of reading 3 sentences. Let's see. What is it? Latch OS. Latch operating system. What is this? Where is our presentation?
This is the checkers game where grandson and granddad will bond. This is the kitchen where the new boyfriend will unofficially become family. These are the Verbo vacation homes waiting for your family.
So this is why it's important to look at the investor who's bringing them public, right? Tishman Inspire is a global leader in real estate. Why is this an important company for them to add to their portfolio? Well, they own all of these, commercial real estate properties, including apartment buildings, I'm sure, including office buildings, I'm sure, and that's where Latch OS, Latch operating system, can be, or is designed to be applied. It's to uh, big commercial real estate property where you're going to have multiple tenants, you're going to need multiple, I guess, apartments or offices to be unlocked and locked and monitored, and they have an entire operating system designed for that. So that's why, well, one, I already like the investor bringing them public. Obviously, they're Chamath, they're attached to Chamath too, which I love, but I don't need to talk more on why I love Chamath. I've already done that for the past like 5 months now. Well, since September at least. Boom. Nothing better than a nice strategic partnership. Yes, this is so much easier. Well, SPY's turning around right now, but I mean, everyone's portfolio is taking a dump today, especially if you're an open door holder, like I know you are. Um, I'm not even looking at open. I'm going and everyone knows last, like, since I started the stream today, I'm waiting for a transfer to hit my account so that I can go load up on more open door. We're not going to see a price this cheap in a long time. As far as the other positions you hold, I don't know what's going on. Why are people trashing Shamoth right now? JC, what are they saying? Yeah, this is a good opportunity to average down then job. And what I do with Open Door, I think I said yesterday as well after the call, I buy with almost any SPAC I play. I just added a new one today, RMGB. That's the first one I've added since Open Door back in September. I'm very picky in particular. I play warrants on them though, because warrants allow me to use limited buying power. If say you want, I don't know how much equity you have in the company currently as far as shares go, but if you wanted, say, to own 100 shares, you can own 100 shares outright, and you can tie up all those resources right now um, to hold 100 shares, or you can buy warrants on them. Um, $100 or 100 shares worth of warrants. So like basically the warrants, you pay for the price of the warrant, and then you pay 11.50 on top of that later on if you want to redeem them. And typically you have about 5 or max 5 years to decide if you want to redeem them. It's like a down payment. So I can tie up less capital now to own 100 shares if that's my goal for owning equity. Or if I want to own as much equity as possible and I only have $1,000 to spend or to allocate to it, well, I can own if they're trading for $10, I can own 100 shares, or I could take $1,000 and I could buy warrants with them. So like the one I just bought today, I bought warrants for $1.40, and instead of only taking $1,000 and owning 100 shares at $10 a pop, I can buy warrants of them at $1.40, and I can buy about 800 of those. So that's what I do when I'm playing SPACs, and there's less risk on the table as well. If you wanted to own 100 shares just in general, buy 100 warrants. There's way less risk involved, and you tie up way less money, and you got at most 5 years to decide, and they'll give you, a month notice if they're going to be, ending warrant redemption, but none of my warrants have hit that mark yet. But yeah, even then you'll have a month to decide if you want to own the shares outright or if you just want to sell the warrants and take your earnings. So that's what I would suggest with Open Door, is average down, but average down through warrants if you can. Warrants are super, super cheap right now on them. Smart access. I'm not going to get into the details here. I'm just going to go like. Alright, let's move the investor presentation over here so I can enter some numbers in here. He didn't sell out entirely of Virgin. And I listened to Shamoth's podcast, All In. Would definitely recommend it to all of y'all. There's a wealth of knowledge you can gain from that. It's just him and his mogul friends that, they're poker buddies, but they're just good friends in general. All super successful entrepreneurs in their own right, all super successful investors in their own right. But they just had, Vlad Tenev, Robinhood CEO, on there because one of the members of the show, Jason's been a Robinhood investor since their Series A. They had him on there explaining what was going on, and Chamath, they grill the people. They don't do the typical the interviews that are just casual, laid back interviews. Where you let the people go off their scripts, like I think Vlad did for most of the interviews we've seen. They grill them, but Chamath on there announced that people were upset that he had sold part of a Virgin, and the thing with that is it's all about liquidity, right? He's got other moves that he wants to make, just like we do as investors, and he didn't sell all of. Did he sell all $213 million, JC? So I'm going to finish getting this, and I can look into that really quick before I get off for the day, but I want to at least get the numbers down on paper for the transaction overview and how much revenue they're doing currently a year. So I need slide 37 and 36. Cool. All right, transaction overview, enterprise value, valuation of the company. Value after they get their cash infusion. That. This is current as of the 5th. Oh my god. Alright, let's look at TSIA's current stock price. $11.22, last closed at $11.22, so not moving. Market cap currently is $418 million. Alright, back to the presentation. Percent of this that are going to be public shareholders, we're looking at, wow, we're actually getting a very decent chunk over here. 19%, and sponsor/founder shares are 4%. So totaling 23% total gives us a post-merger adjusted market cap of $1.8 billion. You can see that this is the enterprise value. Typically what I base it off of is enterprise value, and that's because, that's what they say that they believe they're worth. And yeah, equity value is great because you're getting, all this cash is going to be infused. They're getting about $640 million infused in there. That'll pay for existing debt. They'll pay for growth. They kind of lay it out there as to what it's going to be used for. I'll read it to you. This is going to be used for. See right there. 450 million is going to be. Just from the transaction. You can see the share pool, how it's divided there. You can see what the pipe had already included before then. You're going to see where all this money's coming from. You've got their existing equity is going to equate to about $1 billion. This is from TSIA. This 23%. It's going to be $300 million, and then the pipe investment is going to be $190 million. And they're going to use it as so. $450 million is going on the balance sheet. 40 million is going to cover transaction expenses, and then this is going to equate to the shareholder equity. But yeah, they account for all of them, a few other things as well, to find the equity value of a company, or to determine the equity value based on their enterprise value that they're offering, or that they've decided they're worth. And yeah, so I just think enterprise value that they've considered, like, all things considered, they've said it's worth $1 billion, and they've agreed on that. And that's what you're investing in, is the enterprise value, not the equity value. So even though they have more cash on their balance sheet now, technically makes it more valuable. Let's base it off of that. We're looking at not even being double what the enterprise value is currently. If you want to take into consideration the cash on the balance sheet, use equity value for all things considered. And you're trading slightly above there because the price of this just hasn't moved. So you can get in for a fair price here if you like what they're doing. Let's look at their existing revenue though. In 2019, here's what they did. This is going to be in millions. They did 111. Pretty decent chunk of change. I don't like pre-revenue companies. Most investors don't like pre-revenue either. If they're going public, you see pre-revenue in private rounds typically. This is for 2019. Future revenue projections. We're looking at (2020 to 2025). Let's look at 2021. Yeah, I'll do 2021 through 2025. Oops. 2023, we're looking at $1 billion of revenue, what they're estimating. And then 2025, you're looking at 6, a little under $2 billion, 1.7, almost $1.8 billion in revenue by 2025. This is going to be 2021, 2023, 2025. So they've got annual recurring revenue also, because of course they got a subscription model here. That's good to know. Oh, awesome. Okay. Let's see our compound annual growth rate. What does it look like? Well, we need to pull up our calculator. Logan, welcome back. We're going over TSIA. They are merging with Latch OS. They do full building. They're a full building operating system. So like smart access, delivery. I mean, I'm going through their investor presentation right now. Just getting some numbers down. About to do a little calculation over here for CAGR. What are we going from into? This is 2019, so we're going from 111. We're going to 1780. It's going to take us how many years to get there? 2020, 2021, 22, 23, 24, 6 years. location now. We're looking for TAM. What is our total addressable market? Whoa, that's impressive. Never churned a customer and continues to grow revenue with current customers. That's pretty impressive. Yeah, that's very impressive. Ooh. They've got really impressive numbers, guys. If you know believe in what they're doing, I mean, I think it's a really cool idea. I need to do more independent research. You know, I take a long time before I make decisions on companies typically. Um, to actually pull trigger and invest on them. I like what I'm seeing so far. Um, you know, unlock your door with your phone. Their residents are using the latch on average 4.6 times a day. They're opening the app to adjust their thermostat. Um, let's see what they do for access sharing. Building access, maybe? Like buzzing someone in? Intercom, talking to whoever's outside with a package for you. This is a really impressive software. I've never seen it before today. Homeowners insurance or renters insurance. I'm sure that's what this is. Look, checking your internet. I don't know what this is. Let's see if I can get a better view of it, but it's going to get too blurry. Yeah, too blurry. Wait, no. Okay, we're here to knock out your to-do list. Chores, cleaning, laundry. This is fucking cool. So you can give people that they can download the app, and you can give them access to your apartment if they have the app, and to the building. You know what doors you can access through, which days they're allowed to access through. That's awesome. I don't know. What do y'all think? This is TSIA, JC, TSIA. U.S. residential rental owners and operators alone represent a $54 billion annual market, 93 million apartments in Europe at an incremental $90 billion annual market opportunity. So, if you combine that, looking at 144 billion. They're just scratching the surface right now, it looks like. Rogan, welcome back. I'm gonna be here for like 5 more minutes while I finish this up, and then I'm gonna head out for the weekend. Very impressive company. See if they're cash flow positive. They do have their net on here, which is rare. So in 2019, they did how much in revenue? They did $111 million in revenue in 2019. They took a net loss of $50 million. The one challenge I see for the company would just be, the real estate market. The real estate market stays hot, they're going to continue growing because they've got ins with all of these real estate companies. These are all real estate development companies who are either customers or just full-fledged partners, including the company bringing them public to the SPAC, Tishman's Fire. They build commercial real. These are all commercial real estate development companies, so they get into the buildings as they're being built and integrated, from the ground up, literally, so that all the tenants in the buildings become users at the very least, and they subscribe to they make their own subscriptions with Latch operating system, which is awesome. I've never seen anything like this, and it's already being used. They've already got revenue. It's not something we need to wait on. They've got $100+ million of revenue existing today. I have no idea what their balance sheet looks like. They don't give you that much info in the presentation, obviously. Future revenue projections, 58.8%. It's high-ish, but not nearly as high as some of these companies' compound annual growth rates that we see. This isn't the biggest market out there that I've seen. $144 billion global current TAM. This is what we see for Renew Power, the company I just invested into this morning. $282 billion. Open Doors. Anyone else who in here is an Open Door bag holder like myself, theirs is $1.6 trillion annually. So that's the bigger the pie. If we could take just a little sliver out of it, even it's only 1% of a $1.6 trillion market, if we take 1% of that, we're making $16 billion annually right away. So the bigger the pie, the smaller we share, or the smaller amount of share we can capture, and we're still going to be getting paid. I don't know who their main competitors are. That might be. Let me go throw this link in here first for y'all if you want to look at it. And hopefully over the weekend, I'll message the Discord as soon as I have everything figured out on the site. I'll give you guys some instructions on how to get in there so you can use it over the weekend, ideally, or starting next week. There we go. Make notes on stuff over the weekend too when I have time to collect my thoughts. Let's see if I can find their competitors really quick. Yeah, that is, not as small as, but it looks like, I think Latch is a better name than most of those, for what it's worth. I don't know much about the competitors in depth yet. I'll need to take some more time on that. Um, yeah, let's see. Catch up in chat real quick. Brain melting conversation about algo development. I said I missed most of the stream today, but a one-on-one with the futures master. Oh, you talked to Eric? Okay. Eric is an absolute animal if you're talking about Eric. Let's see, how do you talk about WMT stock? I feel they were a solid blue chip stock already. Work for the ecom department, so I've seen how fast they are growing it. I have it set up where I buy company stock, they match 15% out of your paycheck. I love that. If you work there and you love the company you work for, you can see from the inside, how quickly it's growing. You don't get obviously all the stuff, all the juicy info from the executives of the company, but you're not supposed to be allowed to see that typically and trade with it. Let me see. Maybe I can do one more for public. They have a recent filing. Give me 1 second, Logan. Yeah, Walmart is very, very safe money. Trying to get a gauge as to when they're going to be releasing their next reports. They released their annual report last March on the 20th. Their last quarterly filing, I might not do a full breakdown for you right now. Yeah, the last quarterly report was in December, so it's already like 4 months old. Let me see. Yeah. What do our assets look like? This is in millions. Assets stay roughly the same over the course of the year. Liabilities are a healthy amount, I think. Yeah, shareholder equity continues to grow as you'd expect. How about our liquidity? What are we looking at? Total current 73 million, and okay, so we are not liquid right now. Walmart is not liquid as of their December filing for their quarterly, but that's 4 months old now. 3-4 months old. I'm gonna be looking for their 10K to come out, I believe, this month, to get a better, I guess, a more educated opinion on it. I'm just looking at old info. Oops. I guess I could bring it up over here because I'm not going to do the full rundown right now. Where is our revenue? There it is. Revenue was up this year, or in this quarter, compared to the same quarter last year. Revenue was up for the first 9 months compared to the first 9 months of 2019. Here's our bottom line. Net income, profit margins were up, it looks like, too. 5.1 billion versus 3.2 billion. And first 9 months, 15.6 billion versus 10.7 billion. So profit margins are up. Without seeing, their updated sheet, Logan, I do like Walmart. Obviously, they're a very, very safe play. Hop on anything that they're letting you buy if they're offering you that great deal. The public doesn't get that, and you know that they're a great company. They're a safe company. When the market does eventually crash, a lot of money is going to flock into Walmart, just because it's a safer play. Your money's safe there, and yeah, I mean, I don't see any reason not to. If you can afford to, throw some money at Walmart and let it sit there. It's going to be safe for quite some time. They're making moves. You see them making moves. We'll see their report in the next 2 weeks or so. So I'd expect there either be a run up in that time or I would not anticipate a sell off for Walmart. I think it's going to be a pretty solid report for them. Their numbers are way up across the board. Yeah, that's what I see for Walmart. So that being said, folks, I'm pooped. It's been a long week. We've been looking at red all week, but the spirits are high over here. Y'all are real ones for being here throughout this process. 2 straight red weeks is not easy. And the fake investors, they go and they hide under the rocks in these times. So y'all are real ones for coming out and putting your brave faces on every day. Don't ever forget that. Hope that you are learning something in our times we spend together. And yeah, like I said, I'm looking to get things set up on the website, so where you guys can access it either over the weekend or at the very least by the end of the weekend, so that you can start utilizing the spreadsheet that you see me working on every day, whenever you want to. Other than that, if you guys have any questions, my socials are in the description below. Ask me on any of those. Ask me, hit me up on the Discord. Just make sure if you have a question for me, you tag me in the message so that I get a notification for it, because I get too many notifications otherwise. Or send me a private message as well. We're going to be very happy we were here and brave enough to play the game when no one else was. That being said, y'all have a great weekend, and I will see y'all Monday, 10:30 a.m.